Hello all. Today we are going to discuss the treatment of goodwill at the time of admission, right? And throughout the partnership accounting, you will take this treatment only. So, what is the treatment? There are two things you have to keep in mind. One related to the goodwill which is already existing into the books of account, right? Goodwill already existing in books of accounts, that is in old balance sheet, right? If at the time of reconstitution of partnership, if the old balance sheet is already always given to you in the question, and the goodwill is there and appearing in the balance sheet, what is the treatment? And the second thing is goodwill brought in by partner, right? How he is bringing in. So first thing is, you have to keep in mind, when goodwill is already existing into the books of account, the first thing you have to do is, whenever you are doing the question, write that goodwill off from the books of account. That goodwill being an intangible asset, that is appearing in the will be appearing in the asset side of the balance sheet, right? So you have to credit it, to write it off. Goodwill account credit, right? And the old partner, all the old partners capital account, I'm writing here capital account, thinking that they have the fluctuating capital account, so capital account or current account as the case may be. So old partners capital account will be debited, right? Their account will be debited with the old PSR, old profit sharing ratio, right? This would be the entry. So this is the thing you have to take. This general entry you have to take when the goodwill is already appearing into the books of account. In the second situation, when the goodwill is brought in by the partner, right? So we have to see different cases, right? Now in the second thing, we have different cases. First, when goodwill is paid privately, so no entry would be there, no entry would be taken into the books of account if goodwill is paid privately out of business. So anything which is outside the business, we are not going to take into the books of account, right? The second thing is, when premium for goodwill is brought in cash, right? So what would be the entry? The entry would be cash or bank account debit to premium for goodwill account, and after that the premium for goodwill account debit to sacrificing partner. Whomsoever is giving their share to the incoming partner, the goodwill will be distributed among them. So sacrificing partners capital account or current account as the case may be. So this will be given in the sacrificing ratio, right? So this is it. Of withdrawing the goodwill, I will take that entry differently. So this is it, the first thing. The second thing is, when goodwill is brought in kind. So goodwill is not brought in by the partner in terms of cash, rather he is bringing in some kind of asset. He is allowing his asset to be used into the business. So what we are going to do, that debit the assets account, whatever he is bringing in, to premium for goodwill account, right? The first entry, and the second entry would be the same, premium for goodwill account debit to sacrificing partner. Sacrificing partners capital account, right? In old PSR. Old PSR again. Sorry, not old PSR. This is sacrificing ratio. Sorry, sacrificing ratio, right? So goodwill, whenever you are distributing the goodwill to the sacrificing partner, that will be distributed among the partners in their sacrificing ratio, whatever the ratio they are sacrificing in favor of new partners. So when goodwill is brought in kind, and there are situations, right? The fourth situation would be when the partner is not able to bring in his goodwill, right? So fourth case is when partner not able to bring in goodwill. So partner is unable to bring in goodwill right now. He says, okay, I will bring it, or I will make the payment in the future. So what happens? We have to make the sacrificing partner's claim against the new partner, right? We have to book that. And what happens? We have to book through the current account of the incoming partner. So incoming partner current account with the value of goodwill, right? With the value of goodwill debit, and to rather sacrificing partners capital account, sacrificing partner capital account or current account, as the case may be, in sacrificing ratio, right? In the sacrificing ratio we will distribute that. So this is, and why we are doing that with the current account, because if we are taking it through the capital account, the capital account will be reduced and that amount will not show the correct picture. That is why the capital account will be shown with the full value and the current account will be shown here, and that will have a debit balance. That is the claim of the old sacrificing partner against the new partner, and that will be having the debit balance and will be shown in the asset side, right? And in the fifth situation, what happens when incoming partner brings in part of goodwill only. Let's say he is bringing 20% only, right? So he is supposed to bring 1 lakh rupees, but he is bringing only 20,000. He says 80,000 I will bring in later on. So what happens? We will take bank account debit. Let's say 20,000 rupees here. Suppose, right? Bank account debit to premium for goodwill account, right? 20,000 rupees. The first entry will be whatever the amount he is bringing, and second would be incoming partner current account debit 80,000, what he is not bringing, right? And this premium for goodwill that will be debited and distributed to the partner, sacrificing partners. So here the sacrificing partner will take partner's capital account, right, in sacrificing ratio. So incoming partner's current account with the amount he is not bringing in, 20,000 he is bringing in, so 20,000 will be here and will be distributed to the partner, sacrificing partner in sacrificing ratio, and this will be his liability, and in future whenever he pays, that will be written off from the books of account, right? This is the thing. Then we will have another entry when sacrificing partner take away or withdraw goodwill, right? So they have every right to withdraw the money which has been given by the incoming partner. So that is very simple. Right? Partner's capital account, whomsoever is taking the goodwill off from the partnership firm, partner's capital account or current account, whatever the case may be, they are preparing their capital account. Partner's capital account debit to cash or bank account, right? Whenever in the question it is given that they had withdrawn the money fully, so whatever the full amount they have received, they will take XYZ, whomsoever is the partner, to cash account or bank account. If they say half of the goodwill, there are number of questions which say half of the goodwill of the partner have been withdrawn. Let's say he is receiving 10,000 rupees from the incoming partner, so 5,000 he will take away, and this entry will be like this, right? Partner's capital account debit 5,000 to cash account, or he says 25% or 10%, whatever the amount is there, the entry would be this, right? So partner's name, partner's capital account debit to cash and bank account, cash or bank account. So this is the treatment of goodwill. The first thing, if the old goodwill is there, write that off. And there are number of cases when the partner brings in goodwill, he will bring in cash or in kind. In cash we will straight away debit cash or bank, and in kind we will debit the asset which is bringing in. So whatever the goodwill he is bringing in, debit will be the cash or the asset to premium for goodwill account debit to sacrificing partner in the sacrificing ratio. And if the partner takes away, then partner's capital account debit to cash or bank account. And one thing, in case when the partners are not bringing in full amount of goodwill, then incoming partner's current account debit to sacrificing partner, right? His liability will be created, and when he is bringing part of the goodwill, then bank account debit to premium for goodwill, the amount which he is bringing, and whatever amount he is not bringing in, that will be taken in incoming partner's current account debit to sacrificing partner, right? So this is it. This is the treatment of goodwill. I hope you would have understood, and this is very important from the perspective of numericals. Okay, thank you.